Hey everybody, Chris O'Morrow here with Washburn Real Estate Group, coming to you on this beautiful Monday morning. I think spring is officially here. Um, I was able to jump on the phone a little bit earlier today with a good friend, Caleb Janowski, over at Cornerstone Home Lending, and we just kind of went through some great updates on what's going on with the market right now. We went over what's happening with appraisals, if we're seeing any delays in transactions, interest rates, what we're kind of seeing now, what we're going to see in the future, and then a little bit about forbearance, which we're hearing a bunch about right now. You're probably seeing all sorts of articles. So we kind of went over some good stats on that, just talking about some things to look out for, some of the misinformation that's being shared. And Caleb went over some great helpful links to go and visit and kind of learn a little bit more before you're contacting your service providers. So um, if you have any questions, please continue to reach out to us. We're having great conversations, being able to answer a lot of questions as we go through this. Market's still strong. So check out this video and then let us know what else we can do for you. Have a great day. Hey everybody, so I'm sitting down here with Caleb Janowski over at Cornerstone Home Lending, the day team, and we were just chatting and kind of want to just go over like a quick market update, especially on sort of the lending side of things, and just talk about a little bit of what we're seeing right now. We've been seeing some interesting new historic things happen, so I was hoping you could kind of just give us a general update, Caleb, on what you've been seeing.
Yeah, absolutely. So let's move back, let's turn the clock back about a month. Interest rates had reached about a historic low. Freddie Mac at that time was at 3.29% at the beginning of March. Okay. That means millions of people went to their mortgage lender and said, I want to either refinance or I want to buy a home and take advantage of these all-time historically low interest rates. Okay, what that led to was an overwhelming on most mortgage lenders' parts where they have so many applications in their pipeline and they're struggling to get them through the pipeline. Okay. After that initial low interest rate environment, that's when the stock market took a free fall, and the Fed really had to intervene in order to stabilize where the interest rates were going. Because after that historic low period, okay, we saw interest rates jump up a little bit and volatility and tons of volatility enter the interest rate environment. Since then, we've seen a little bit more stable interest rates, especially last week and then at the beginning of this week. We saw more stability, and what that led to was a nice little decrease in interest rates again. At the tail end of last week, Freddie Mac again released their survey, and they said they were at 3.33% on interest rates with a 0.7 points or fees a part of that interest rate, and that's nearing that all-time low again. Obviously, with all of this information, you want to talk to your mortgage lender that you're considering whether a refinance or a purchase well in advance of really locking in that interest rate, so that they know your situation in very specific detail, and so that they can secure your interest rate when it's the best opportunity for you.
Yeah. And something I know we've kind of been dealing with some of our transaction is these longer appraisal timelines because of the mortgage industry kind of being overwhelmed and the appraisal industry then as well.
Absolutely. So with that, and with the virus in general, we saw some health concerns around appraisers and home inspectors entering into these homes. And so we've seen a lot of the different agencies make big moves to allow for exterior only appraisals. So Fannie Mae and Freddie Mac are allowing for exterior only appraisals for both purchases and refinances. And so it's important when you're in the transaction, if you feel like an exterior only appraisal is going to meet the needs for the appraisal that you're requiring in your transaction, to request it. Okay. Yeah. Don't wait on behalf of the appraiser to suggest, or the lenders to suggest, an exterior only appraisal. Be proactive and request it if you still feel like an exterior only appraisal is going to fulfill the needs of the transaction.
Right. And then going back to kind of what you were talking about with historical lows, I think something that you and I touch on every now and then, in which some buyers, especially if you're, this is your first time buying a home, you don't realize when we talk historic lows, we're talking crazy low compared to where we were, in the 90s and the early 2000s, with where interest rates could be 6, 8, 10%.
Yeah, absolutely. It's interesting. We're in a space where at the beginning or the tail end of 2018, we were at interest rates were around 5%, right? And those were still 5% was still a very historically low figure when you consider the 40-year average for interest rates is closer to 6 to 7%. And so now you're moving into historically low interest rates. And what we hear a lot is the Fed cut interest rates. That must mean that my interest rate on my mortgage also got cut. And that's not the case. So your mortgage interest rate and the Fed rate are not necessarily connected, right? What we saw interest rates get driven down by more recently was the Fed committing to buying mortgage-backed securities from the bond market. And that's what's led to the restabilization of the interest rate environment and the bond market, as well as the Fed is now making smaller daily purchases of mortgage-backed securities, which has led to less volatility and more stability in the interest rate environment. And that really took a hold last week.
Right. And then, so we know that appraisals timelines were being difficult there for a little while. We've kind of gotten into this with them allowing to do the drive-bys. It's kind of alleviated some of that. Are there any other, transactions that you're experiencing difficulties because of the current COVID-19 crisis?
Yeah, I think the jumbo lending area is the one who's going to see the most impact on the purchase and refinance business. And that's mainly because jumbo loans are tied to individual investors. And so each individual investor is going to have their individual difficulties in this environment. So if that speaks to your situation, I would get with your mortgage lender to plan ahead and forecast for what challenges might arise in my current situation.
Right. And so I know here on the real estate side, as we kind of work through this, we're not really anticipating a huge dip in the market. Everything is showing signs that we're continuing to be strong, especially here in Kitsap County. We're still seeing a large number of buyers. We're still seeing a relatively smaller section of inventory on the market, which we have been experiencing for the past 4 or 5 years now, as we kind of continually watch it decline in inventory numbers. So are you guys kind of anticipating the same thing, interest rates sort of sticking where they're at right now, not really seeing a huge swing up anytime soon?
Yeah, it'll be an interesting couple months here. In historically speaking, mortgage interest rates tend to stay within 2 to 3% of the Fed's borrowing rate, and so as the Fed is doing their best to cut those interest rates to zero, we should see an environment where interest rates stay competitive and stay around those all-time low historical figures over the course of the next handful of months. That being said, even if interest rates do increase a little bit, 0.5% or 1%, you're still at an incredibly competitive time period for interest rates, given the recent history of where they've been.
Okay. Well, that's really promising looking forward, especially for our buyers just getting in the market now, which, there are certainly difficulties that we're working through, but we're all being able to continue to work and to get people into homes when they need to.
Absolutely.
So then my last question is just more for current homeowners, like myself, people that have mortgages they have to pay, and especially for our investors out there that might have several properties where they're going to have limited rental income because of renters without income. We've been hearing a lot of chatter about forbearance and what companies are allowing, but we're also hearing some misinformation out there. So I was hoping you could give us just a quick rundown of what your, understanding of forbearance is and some of the pitfalls folks should be looking out for.
Absolutely. And let's start. A good start spot there is the Consumer Financial Protection Bureau released an awesome video on their website, which kind of goes over a handful of things that you should be looking at when considering forbearance. It's consumerfinance.gov. I highly recommend people who are considering this option to go watch that video and give yourself a little bit of education. First and foremost, when you're considering forbearance, you need to contact your mortgage servicer. That's the person who sends you your monthly mortgage statement. On there, they're going to have a consumer call area where you can place a call and talk through your options. Some good questions is, how long does my forbearance period last? Okay. Another good question is, how will I be expected to repay the mortgage payments that I am going to be missing? Okay. There's a handful of options that have been talked about out there, but not every mortgage servicer is going to offer all of those options. And so you need to find out all the information about your situation with your specific servicer before considering, is this really the best decision for me moving forward? Right. One of the main forbearance options is if you're gonna, let's say you delay your financing for, you can't make your May 1st payment, you're gonna delay it for 3 months. So you're gonna miss May, June, and July. On August 1, all 4 of those mortgage payments will come due, right? And so it's important to consider that option or that reality prior to committing to what one of these options moving forward.
Right. If I'm not going to be able to save up those payments over the next 3 months, then that may not be the best option for me if my lender or the service provider can provide another solution to that.
Absolutely. And one thing, if you are working on building up enough so that you can make those mortgage payments each month, take your payment off automatic payments and go towards the more one-time or manual payments. That'll give yourself an extra little window at the beginning of each month to save up and be able to make that payment. If you're in the middle of a transaction or you're buying or you're refinancing, it's incredibly important that you make that first payment. Okay, so at all costs, you should be working on making that first payment before you're moving into forbearance.
Okay, that's great advice. Yeah, really smart. Well, the last thing I wanted to do was just give another plug for our buyers class that we're going to have coming up here on the 10th. We're going to kind of go over what we did a little bit earlier last week, a little bit more in depth. And we're just going to try to do it live so people can be jumping on and asking us questions and we can answer them like we're all sitting in a room together how we normally do it, but we're just going to bring it online. So just wanted to thank Caleb for being here, kind of giving us some insights, and we will see you guys there on the 10th. Thanks so much.